Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock. With news, the US Fed says it needs to see more progress on inflation before it considers a rate cut. But they hinted that a cut could be coming later this year. That was enough to see markets worldwide start pricing that in. Benchmark interest rates retreated everywhere. But first in the US, there was actually quite a jump in mortgage applications last week after the prior week's unusual fall. And this latest week more than made up for that prior week. That came despite the benchmark 30-year mortgage interest rate staying above 7%. In its precursor reports, ADP said private businesses in the US hired an extra 140,000 workers in February, following an upwardly revised 111,000 in January. Meanwhile, the number of job openings went down by 26,000 from the previous month to 8.86 million in January, the lowest in 3 months and below the market consensus of 8.9 million. Those American labour market updates come ahead of Saturday's February non-farm payrolls report, which is currently expected to deliver a 200,000 increase on top of the very strong 350,000 January rise. Federal Reserve boss Powell said in his semi-annual monetary policy report to Congress, quote, reducing policy restraint too soon or too much could result in a reversal of progress we've seen in inflation and ultimately require even tighter policy to get inflation back to 2%. But markets moved past that caution almost instantly, with benchmark rates falling, equity prices rising, and the US dollar easing. North of the border, the Bank of Canada delivered the expected no-change rate decision, holding its policy rate at 5% and saying it is in no hurry to cut there. And yesterday in Australia, their fourth quarter GDP data disappointed many, with real economic activity up just 0.2% in the quarter, up 1.5% over the year. Clearly, the contribution from households was lower than expected amid budget and rate pain. And without that strong current account data they had the previous day, they may have had to book a contraction. The US Treasury 10-year yield starts today at 4.09% and down 6 basis points from yesterday. And the price of gold will start today up $19 at $2,145 an ounce and another new record high. And oil prices are up $1.50 at just on $79.50 a barrel in the US, while the international Brent price is now just under $83.50 a barrel. And the Kiwi dollar starts today at just on 61.4 US cents and an overnight gain of 0.5 cent. Against the Aussie, we're down 1/4 cent at 93.3 Australian cents as the Aussie rose more. Against the euro, we've risen to 56.3 euro cents. That all means our trade-weighted index starts today at just on 70.4 and up 20 basis points. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.